Amigo Loans was a prominent UK subprime lender, offering guarantor loans to individuals who could not access credit from mainstream banks, often due to a poor credit history. The core of its business model was the guarantor loan, which required a friend or family member with a good credit score to co-sign and agree to make payments if the borrower defaulted. The company's eventual failure stemmed from a fundamental flaw in its operations: widespread irresponsible lending driven by a commercial focus on growth over customer welfare. The problem: irresponsible lending. The Financial Conduct Authority, FCA, found significant and systemic failings in Amigo's practices, primarily inadequate affordability checks on both borrowers and guarantors. Flawed affordability checks. Amigo's highly automated lending system and staff often failed to adequately assess a customer's ability to repay the high-interest loan. The process heavily relied on self-declared information from the customer's budget calculator, which allowed them to adjust figures for loan approval. Prioritizing profit. The company's culture was focused on getting loans out the door. Its pay and reward system for agents was heavily weighted toward the number of loans paid out, directly incentivizing staff to approve loans, even if they were unaffordable. Harm to guarantors. The inadequate checks meant a high risk of consumer harm. The FCA found that around 1 in 4 guarantors were asked to step in and make payments for the struggling borrower, demonstrating the loans were unaffordable from the start. Liquidation. Despite the approved scheme, Amigo failed to secure the necessary investment to restart lending and fund the compensation payouts. 17 In March 2023, the company announced it would be liquidated and placed into an orderly wind-down, finally succumbing to the financial burden created by years of irresponsible lending. 18. Amigo Loans' failure serves as a stark warning. Prioritizing rapid commercial growth and high-volume lending without robust, customer-centric regulatory controls can create a liability so massive that it eventually collapses the entire business.